Well, it gives us the first insight for how 2024 is kicking off, which looks like a continuation of the growth trend we're seeing in 2023. We're still seeing housing values rising, but nowhere near as quickly as what they were through the middle of last year. To put that into some context, January saw housing values rise by 0.4%. Go back to May and June of last year, and they're rising at around 1%, if not a little bit more than that. So we've definitely seen a slowdown in the pace of growth, but also a diversification. We're seeing markets like Perth, Brisbane, Adelaide, all still recording more than 1% growth month on month. In fact, in a market like Perth, up 1.6% of the month, we're seeing more than $10,000 a month added to the typical dwelling value. But other cities, Melbourne, Canberra, Hobart, have all slipped a little bit lower through the month as well. So I think diversity is the key theme here.
Tim, given that breakdown between markets that are increasing and those that have slightly decreased, what do you put that down to?
There's a lot of factors going on here, but essentially this is just the balance of supply and demand in different cities. In those markets where values are racing higher, Perth, Brisbane, and Adelaide, we're still seeing listing numbers or advertised supply levels around 40% below average, and we're seeing transactional activity above average. But go to markets like Hobart's a really good example, where we're seeing available stock levels are now about 50% above normal levels, and the rate of sale has actually slowed down to below average levels. Part of this can be explained by migration. Tasmania, for example, has a negative rate of interstate migration and not very much overseas. But large markets like Melbourne and Sydney, clearly very strong rates of population growth, but mostly driven by net overseas migration, which is really fueling their rental markets rather than their purchasing markets. And of course, affordability also a key factor behind the scenes as well.
And this is all happening in the frame of a cost of living crisis, as it's been called, and also so much focus on inflation and rates. Does this give us any indication of what the Reserve might do in the weeks and months ahead?
Well, this is the surprising thing. Even though we've got such high interest rates, cost of living crisis, affordability pressures, we're still seeing transactional activity broadly in the national marketplace about 0.5% above the 5-year average. So buyers are still out there, people are still buying property. But you'd have to say, with the latest inflation data coming in much lower than expected, and now a lot of economists bringing forward their rate cut calls, that is going to be a net positive for housing sentiment. We probably will start to see more people positioning in the marketplace to take advantage of those rate cuts, which look like they'll be penciled in for later this year.
Yeah, well, and certainly there have been some anticipating that there could be as many as 2 rate cuts later in the year. I'm sure that you'll be reluctant to make a prediction, but what's your observation of what we can expect?
Well, that's looking more likely. Just looking at financial markets, they're now fully pricing in 2 rate cuts through the second half of the year. Most economists are already pricing in at least 1 cut, and no doubt we'll see some changes there as well. So I think from a housing perspective, we know that interest rates are highly influential with housing sentiment. It's fair to say that as rates come down, or even the expectation that rates will come down, we probably will see housing sentiment lifting, providing an incentive for more buyers and more sellers to become active in the marketplace.
And Tim, this data around the price of housing comes also, as we've seen in recent days, an incredible increase in rental prices across most of Australia. What sort of correlation do you see, if any, between the two?
Well, there's not a great deal of correlation between housing values and housing rents historically, but I think the last couple of years that relationship has been much tighter, mostly because rents have risen extraordinarily quickly. That's quite unusual. And when we see rental markets this tight and rental affordability pressures so overwhelming, it probably does provide some more incentive for renters to become home buyers if they have the financial whereabouts to actually do so. And that's the biggest challenge at the moment is actually home ownership is very challenging. Getting your foot in the door, raising a deposit is probably the biggest challenge, funding transactional costs, but then also serviceability costs are very expensive also. So, the unfortunate reality for renters is we're moving into the seasonally strong part of the rental market now. We've seen the rate of rental growth pick up a little bit through January. That will probably carry through for the first quarter of the year. But broadly, we have been seeing rental growth starting to ease off, which I think you're starting to see rental vacancy rates lift a little bit and a little bit of pressure coming off rental markets.